One question I get asked in my day to day life all the time is what should I invest in? And it's a pretty common topic in anything involving investing. If people know that you keep up with stocks or you keep up with the stock market or you have investment accounts or whatnot, you're definitely going to be fielding this question a lot. And one of the interesting things I've found is that recently it feels like the more knowledge I have on the subject matter and the more I learn and the more in depth I go, the harder it is for me to give a concrete answer. I used to be someone that at certain points in time really easily would just dive into whatever stocks I had or what I was looking at in my own personal portfolio or what I had just added. But at this point in time, it occurs to me that each time I've had following up conversations with people where they ask this conversation, I struggle to give them a concrete answer. And I normally go with the route of discussing broad based market ETFs. Now, it's not like I struggle to give a concrete answer on this subject because I'm not keeping up with markets or I'm not learning or I'm not doing the deep dives and analysis on my own. I do those all the time, continually. It's because the more I learn, the more I understand how every single person has a different style that fits them. And not only that, most people just in general don't either have the solid knowledge base you would want or the emotional integrity and intelligence in order to actually make picking stocks a winning game. And for most of the time, I just end up again going with the broad based market indexes. And this really doesn't necessarily work with a lot of people. And that's something I found really interesting. In that, when you start trying to talk about this, I typically see a few different responses. One, it's a little bit of confusion because I feel like a lot of people don't necessarily, when they're first getting into investing, don't really know anything about a mutual fund or an index. And they have like the connotations of that's what old people invest in, and that's where they come at that from. Or secondly, they're just straight up never really heard about it and don't understand it at all. And so they simply are just looking for you to be like, no, this is a company you should buy right now that's going to 500x, or however people have those conversations. I know at certain points in my life, if somebody had come up to me and just been like, what stock should I buy right now? I would have just said whatever was doing really well in my portfolio, which looking now with the knowledge base I have and my pretty much value investing approach would kind of be the exact opposite of what I would want somebody else to do for me if I were to go up to them and ask, hey, what's a good stock I should be investing in right now? I personally would want somebody to look at me and be like, there's this company that I've done an incredible amount of research on, and all of my values for any sort of intrinsic value, right, are significantly higher than the shares. And there are plethora of wonderful fundamentals with this company. And yet, despite all of this, it's doing really poorly in my portfolio. Because for me, I mean, you can definitely find things on the flip side where if a company has gone up 500%, it doesn't necessarily mean it's overvalued, which I know is crazy to say. And more times than not, it will be overvalued. But companies with very explosive growth can grow in into their price, quite frankly. But on the flip side, I'd feel much more confident investing in a company that has wonderful prospects, that has great fundamentals, and the market is completely overlooking because I feel much better on getting a return on my investment in that means. So, overall, when people ask this question, there's so many different factors that come to mind, such as what's your risk tolerance? What is your previous experience investing? How is this going to impact? Like, if I give you an investment and it doesn't necessarily only stay green, are you going to freak out and panic sell? Because a lot of people will ask for advice just naturally in life. It happens. And if you were to have somebody who came up to you and said, hey, what's a really good restaurant I could go to, right? And just throwing out a different example. So you obviously would have the questions of, especially if you don't know the person well, I don't know the types of foods you like. I don't know if there are specific cultures of foods you've tried or you're averse to trying completely. Maybe if somebody you don't know has like they can't do any level of spice whatsoever, that knocks out like 70% of all of your recommendations, right? But it's such a low stakes question because the worst case scenario, if you kind of lead them astray, is they go waste 30 bucks or whatever at a restaurant and they just tell you, it wasn't really for me, and you move on. Whereas you can give someone just absolutely incredible investment advice. Like if you could look through a crystal ball and see the company that was going to be the biggest returner of 2026 or whatever, you could tell them that, and yet there is still a chance, depending on that person's emotional intelligence and patience, that they are going to make it a loss in their portfolio because, hey, there's a good chance at some point your position is going to be what you would consider a loser, right? It's just natural to happen. It happens with all of the best companies. You could time something at an all time high, and then it is naturally going to drop a bit before maybe achieving a new all time high. There's so much like variability, and you can't necessarily see the future outcomes entirely for someone. And if somebody loses money or you're the reason like they quit investing because they took financial advice on an investment and they didn't fully come in with the knowledge base that you had, or maybe they didn't have the same time horizon for that investment that you had coming at it from a like much longer term lens, well, now you might have just led them astray, and you could be their story on this is why I don't invest in the stock market and it's rigged. Now, I've said a couple times that typically when I get asked this question now, I go for a very safe approach and just prescribe index funds, broad-based index funds. That specifically, I typically look at the S&P 500 and I pitch the Vanguard S&P 500. But at this point, most of the big ones all have the same expense ratio and achieve the goal of cheap, simple, very easy allocation into a broad-based index. And this advice doesn't necessarily work for everyone. And I think a lot of that boils down to, at least for where I'm from, I'd say the US kind of fails a lot of people in education on financial subjects in general. And so it's mind boggling to people that you can beat 90% of all of the players in a game, right? 90% of them, including the professionals in that category, by doing the least amount of time, effort, research possible. Like, you can't hardly name a movie or anything in culture where the narrative is, oh, the main person sat there on their butt, right? Did absolutely nothing. Like, just imagine if it was one of the Rocky movies and they're like, oh, Rocky is going to box Apollo Creed. And instead of doing any training or physical labor or anything, Rocky just sits on the couch for 3 months, does nothing. You have Apollo Creed, he's training every day. You're getting these great montages. He's getting ready for the fight. And then Rocky, after 3 months of sitting on the couch doing nothing, drinking beers, watching TV or whatever, just hops in the ring and knocks him out in round one. Like, it's not a story that applies really at all anywhere in life, and it's not necessarily taught because we're continually told that hard work pays off and putting in intensive time is the go-to strategy, and it it isn't. You can beat 90% of people on earth by parking your money in the S&P 500, clicking auto to invest the dividends, and doing nothing except occasionally adding money to your account to further park it in the S&P 500. And it's insane. It's insane, and it doesn't compute with most people that the simplest and by far simplest strategy and easiest and least time consuming is arguably the best. Now, in terms of why the boring strategy, and it is incredibly boring, right? Most people have this view of the stock market, especially now due to really the gamification and the constant news pushes and social media, how social media treats stocks and how content creators even treat investing, most of them think that the like super active in your face, continually doing stuff is going to reap these massive rewards. And it's not really that it's a secret that you're significantly better off, and 99% of people on earth are better off doing basically no effort investing. It it's not a like hidden secret by any means. It just doesn't click with people. And then even if you were to take the example of like the 90% to 10%, when you look inside of that 10%, if you are barely beating the market, just like barely beating the market, how do you value your time and energy and effort you put into barely beating the market? And then you get to view the opportunity cost of all of those hours you spent researching, you spent looking at 10Ks, you spent trying to dig up different stories, trying to wait and patiently buy things. And you get to look at that and you get to compare again to somebody who did just almost as well as you, whose whole approach was, and it just doesn't seem worth it. It does not seem worth it at all. And I completely understand. I still have a portfolio where I do invest in single stocks, and I feel like at this point in my life, and maybe this will change down the road, but I bring in multiple years of investing, but more importantly than just experience investing, I bring in a plethora of reading, of watching YouTube, of listening to podcasts, of listening to Audible books, of looking at the Wall Street Journal. And that's why I feel competent, and my performance will show that I can slightly beat the market, right? And I have consistently. But that doesn't necessarily mean that putting all of that effort into beating it was, well, like, fairly paid in a sense. What if I had used some of that time and done other things, right? And you don't necessarily have an answer to that question, but for a lot of people that are in opportunities where they could be parking those resources into doing other things, like trying to pick up more skills and take on extra opportunities and build themselves up in a workplace, or really compete better for promotions or whatever the case may be, they might actually be much better off doing that and just leaving stock picking to, and I'd say experts, but a lot of them can't even beat the market. So just leaving the stock picking to people in the know-how, probably. So now when I give recommendations in terms of what people should do with their investments, it's not necessarily that I just try and give them ticker symbols of ETFs, because again, you can give somebody like the best, objectively the best portfolio imaginable. But if they aren't going to take care of it, and oftentimes take care of it means do absolutely nothing and just let it compound. But nevertheless, if they aren't going to take care of it and understand truly what they own, they're probably going to end off worse than had they just not had an investment, right? Like that can definitely happen for some people. So now, the takeaways that I try and strive for, and that I hope people learn from and understand, is the best investment advice pretty much is learn to control your emotions. Figure out what investments you can have where you will be able to sleep at night. And figure out at what point you can achieve the highest return while still being able to sleep and understand your risk profile. Unless, of course, you're like at the point where you're very close to actually needing to use that money, and then you probably shouldn't be seeking the highest return possible, because again, you can't really understand what's going to happen, right? A lot of people will come from the perspective of the stock market's gambling, and in the short run, when a lot of people, and I know I quote this news article all the time in research, but the Wall Street Journal put out a thing where the average holding time is about 5.5 months now for a position. And this has continued to go straight down basically in thanks to the gamification of investing, and additionally the news sources at this point really just trying to promote action, right? And in that time period, it very much is like gambling. Sure, the odds can still be more in your favor than, say, like slot machines, but I've been to Vegas. There are still people that you will watch play slots, not because, oh, I brought money to lose and I know it's just like a fun little game and a novelty, but because they very much think they can go win, right? And it's a sad reality, but in a sense, people can very easily turn a game that is not necessarily gambling in the traditional sense, but a game that is stacked in their favor, especially at long time frames, right? And they can turn that into a short term gamble that is rather unpredictable if left to their own accord. So, overall, I really just kind of wanted to yap and put my thoughts out there in terms of this because, again, it's a question that I've received so many times over the years. And admittedly, I have kind of fun thinking through this now. One would assume, I feel like, that with most things, the more knowledgeable you kind of get on a subject matter, the easier it is for you to come to a concrete answer to like give to someone and to push them in the right direction for guidance. And yet, I've kind of found that with investing, it's almost in the opposite sense, where it feels almost like trying to convince people that no, the easiest, simplest, and smartest, at least in your odds, strategy is actually the one you should be doing, not some complex thing. It's not rocket science at all. It's still shocking that more people don't fully understand the powers of just passively investing. It makes so much sense to the average investor. And not only the average investor, a lot of professional investors have continually hyped up just parking money into broad based indexes. And these are people who are world renowned. We consider them the greatest at picking single stocks. And here they are recommending that you take on the passive approach. So, I hope you found that insightful or at least entertaining to watch me kind of get my thoughts out there. But I really appreciate you checking out my video and thank you very much for your time.